What's up, everybody? Thank you for tuning into this video. We're going to go over today's market and a V-shaped recovery, basically how to spot one before or as it's happening, how to capitalize on it to make profit, and what to look out for to avoid trading on the wrong direction, which we're going to learn from my mistake today to better our trading decisions in the future. So if you're new here, make sure to hit the subscribe button. Also, if you want a very good trading resource, my Instagram, I post daily trading recaps along with very good trading tips and tricks. I will link this in the description below. Definitely are missing out if you are not following it. And now without further ado, let's get right into the video. As always, to get some context of the market, to get an overall bigger picture, let's go over yesterday. And yesterday was a very balanced day. It's something that we've been seeing, and the intraday action has been a little tougher to trade if you are not scalping. So the first 3 hours of the market open was balanced. Then towards the end of the day, in the mid-afternoon, we rallied inside of this supply imbalance, and we did sell off. Now going into the overnight session, we did make a move right back into this 389175 supply zone. This was the area I was a bear below as long as we tagged this supply and stood under 3900, which is a whole psychological number. So overnight we came into the zone and then we were selling off pretty nice, and this started to form some type of a supply zone. So now we had supply a little lower compared to the supply that we had yesterday. Now it was at 3882. So the market was selling off, then it was getting closer to the open, and the context of it was very weak. A lot of the majority of the equities that we trade, Apple, Amazon, a lot of the major tech names and market leading stocks were also gapping down. People were getting a little fearful. They saw their portfolio was opening into the red. And in fact, buy the dip hashtag was trending on Twitter. So a lot of people were prepared to maybe add to a position. A lot of people were going to buy the dip. They think that the market, is having a hard time coming down. So when it does come down, it's going to be on discount. They're going to get it at a cheaper price. And it could be a good area to maybe either start a new long position or add on to an existing one, which is nothing wrong with that. You have to be aware of the context and of the sentiment. Supply zones in the past have been rejecting nicely now that they're removed from my charts. But we've been in a consistent downtrend, making tons of lower lows, lower highs. Supply zones have been rejecting, and the majority of the moves have been happening overnight as the intraday action has been very balanced. So now if I go to a smaller time frame chart, I'm going to go to a 5-minute. Let's pull up my pre-market plan today in my Discord here. So the pre-market plan, I post these every single day. It gives me my guideline, it gives me my outlook, and it gives me my levels where I want to play. And then all I need is for price and context of the market, along with volume, to confirm when I actually, want to be a participant. So the main thing was more blood overnight. We had supply making lower lows, lower highs. I'm still a bear under 3,900. If we were to rally into the 3882 to 3900, I'm going to merge all the zones. I'm a bear below it until we're above it. Then we had demand. The 3830 to 3810 is a key area in my opinion. It looks like a nice area for price to test and gauge market participant interest. So if I go to the 3830 to 3810 mark, this is the area. If I pull up a 30-minute, or let's pull up a 90-minute chart. This is an area where the market was very balanced before making another leg up. So you have consolidation, and I love to see consolidation. Balanced markets followed by a nice move up. Validate that this is an area where positions were being built into the long side. So we wait for price to retest because it's safe to say we have buyers in this area that are long the S&P 500 that were riding this trend up. So once price comes back down to test it, either A, they're going to defend that area, and that's when we're going to use price and volume to confirm a valid demand zone, long play once we come into demand. Or we're going to see if sellers were aggressively hitting the market and buyers were not strong enough, they're not getting rewarded, and they're soon going to be underwater. So now fast forward to today, we were watching this zone. It was something similar to the 3890 to 3880 zone that we're watching from this area right here, where price bounced off of once, twice, 3 times, 4, 5, 5 or 6 times before, finally coming down. And that was really the telltale sign that sellers were very, very aggressive. They want more downside prices. So today we were opening up, and here we have our first 3830 supply zone. So this is where experience and market context comes into play. This is something that I've recognized over and over just by journaling and reviewing my journal, seeing what works on certain days, what doesn't work. And then when I see it actually form in real time, I could kind of get a sense of, hey, maybe this has a higher chance of actually happening versus maybe something that's going to keep coming down rather than bouncing here. So pulling up back up to my Discord, I could see a balanced day. We're currently stalling at demand. If we get below it, I could see 3,800 coming. Expect some volatility. Now, the whole sentiment of the market was the whole buy the dip. And my goal today was to short basically any rallies inside of new supply that forms, or short any failed rallies by buyers not getting rewarded. This is the type of analysis you have to do. You have to put yourself in the market participant's head, in your competition's head, see where they're hurting, see where they were getting rewarded, and then really gauge their participation based off of that. So today we had a V-shaped recovery, which is essentially when the market sells off very aggressively. I mean, look at that volume. That volume is super, super strong. Haven't really seen that in a little while for intraday action. But a V-shaped recovery is as simple as it says, as simple as it sounds. We come down and we make a V-shaped recovery, very aggressive sell-off, and then a very aggressive rally and a very aggressive bounce. So this is something similar. If I pull up, let me go to a blank chart. If I pull up a yearly chart, this is something similar to what we've seen pre-COVID, when we had that really nasty sell-off with very aggressive volume. Obviously, this is on a little higher of a time frame, but the whole point, exists here. This is an obvious, left side of the V. Buyers very not really eager to get into the market. Yeah, we have short little pops, but immediately sellers step in and bring price lower. I mean, this was a 1,200 point sell-off in about a month period from February to March of 2020. And then, we get a nice little dead cat bounce. We start, coming up, making somewhat of a V, and pretty much every single rally gets bought up. So a rally, you short the market. Yeah, you have to be fast with your shorts. You have to have a scalping mentality. But new buying is coming into the market as pullbacks get absorbed and we start heading higher, making a higher high and continuously making higher lows. So that, V-shaped recovery led ultimately to, an all-time high break and to where we're currently sitting at the market, which is pretty crazy to look at, where we're at right now compared to where we were in February, March, when whole COVID hit the fan. But going back to this video and intraday action, same thing here. So when the market opens, and again, this is really something that comes with experience, this is okay. I'm very against chasing a move to the downside, but this is something that I've seen over and over between my journal when I review days that happen like this, where there's zero bidders in the market, there's zero buyers entering it. The first 6, 7, 8 candles in a market open were red 1 minute candles. I don't even use 1 minute charts, but just to illustrate this point, you could see that there were zero buyers, and for at one point where there were a lower wick, it would immediately get rejected by sellers. This is a 30 point move right here in 15 minutes of the market open. That's very, very aggressive for the S&P 500. And for me to see that no buyers were very eager at this demand zone, and then, again, this is a very, very key level. This was telling me that sellers were very, very aggressive. And again, some days like this, it's acceptable where you're going to have to scalp something fast and get a quick move down, and you're going to have to chase it because there's zero bidders in the market. I'm very against it. You have to time it properly. But this was a 50 point sell-off. It was very aggressive, very nasty. So on days like this, you're going to see buyers step in immediately. They're going to prop price up. They're going to give sellers no more breathing room. They're going to give them no chance to bring it higher. And if you were watching this candle sell off into the 3804, obviously below this demand zone, so now this is invalid. If you were watching this, I mean, you could tell right away just by the buying and selling pressure. This was all buying pressure. You're going to just tell immediately that from 3805, we bid it up about 15 points immediately in a 1 minute period with not one sign of any type of pullback. And then this is my mistake today, and I said this to myself as the market was trading, to really stay away from the short side. This is going to be a V-shaped recovery. This is a dead count bounce. Do not try to be a hero and, pray for more downside. On days like this, I avoid the short side on the backside of the bottom V. So I took the market short as soon as we started stalling here at the 3840. It got rewarded pretty much right away. But immediately, this thing started coming up and we started hitting VWAP. And then again, I took the market short at VWAP. Once we started doing this, started rejecting it a little bit, volume was coming in right at this candle right here. Took the market short and I stopped out for a small loss. So it's important to always review what you see in the market. This, to me, this is where emotions get involved. In my head, before I put the trade on, I said not to short it. Yet I wanted to hit a home run. Yet I thought that the market was going to continue going lower. And obviously I took 2 losing trades on this on the backside because I thought something was going to happen, had no valid confirmation, and I went against my edge, and I went against what I know works for me and what to basically avoid. So when we have V-shaped recoveries, completely avoid the short side. And how are we going to know are they V-shaped recoveries or not? We consistently make higher highs, consistently make higher lows. We never break the previous low, and we continue to break the previous high. If we start breaking, the low, let's say we come up here, and then we start coming down, testing maybe this low, and then we test low a day. Yeah, we could see some downside pressure, but this was after the second test. It was pretty imminent that buyers were strong. It was a V-shaped recovery, and I know some traders actually took this long, along with NASDAQ in my Discord room, and had a very nice long trade on them. So once we did get above this, it was choppy in the afternoon. There was really nothing to highlight. There was really no action. We did, break that lower low, and we were making lower highs. But once we did really break, this did set up for a nice end of day rally into our supply and balance. But the main point I want to highlight here is follow your plan, follow your emotions. Don't do what you think the market's going to do. And if you have something that you've seen, work out continuously, don't go against it. And, this is a nice V-shaped recovery on the S&P 500. It's going to be interesting to see now that we have some buyers built in down here. If price is going to come down, are we going to test it? Are we going to bounce off of it? What is going to be the case? A couple other things I want to go over is a buy the rumor, sell the news type of event. I see a lot of people talking about CCIV with the merger with Lucid Motors. A lot of people were swinging an equity, swinging an option on this, and you have to put yourself in their position. If everybody's doing it and everybody's buying, there's going to be no more buyers left in the market. You have to put yourself. I always like fading with what the majority does. If everybody's long, I like being short. It goes along perfectly with my supply and demand, strategy. That was with the S&P 500 today. Everybody was buying the dip, so I wanted to short the rallies, and that bit me in the ass, towards the 2 trades that I took. CCIV had the news yesterday with the merger, and it's buy the rumor, sell the news. Positive news, yet price started coming down, and now you have a lot of long traders on the water. NIO, a lot of demand zones again got crumbled today. So I could show you, I could show you the NASDAQ, for example. The NASDAQ had tons of demands in this up here in this area. Now, since we're below, these are all invalid. And it just goes to show you, not every zone works, but it's finding the areas where price confirms it. Look at that heavy selling volume inside of demand. Finally bounce off 12,800 for a nice rally. But these zones had no confirmation. Yes, we're at demand, but price did not bounce at them. NIO did not take this long today just because of the sentiment of the market. I wanted double confirmation for a long trade. But I mean, we hit this demand zone perfectly. Volume's there to confirm it, and we made a nice bounce. But no one's going to know this was the low. No one was going to know that the bottom where it was today on the market. Same thing with Tesla. Tesla has been getting beat up, and I could show you tons and tons of demand zones above that just did not work out. And what that's telling me is sellers are very aggressive. Buyers are not ready to take this thing up yet. So what we do is we wait for either demand to bounce, double confirmation, or we wait for new demand to form, and we wait for pullbacks to get long inside of demand. Tesla's all the way at $619, so pretty crazy to know that we were at 900, a couple of days ago, or about a month ago. So I hope that wasn't me just rambling on. I tend to do that in my videos, but I just try to get my point across as best and efficiently as possible. If you did enjoy this video, make sure to smash that like button, follow me on Instagram, subscribe to my channel, and if you really want to learn more and get involved with my Discord community and learn more with my strategy, make sure to check out my website as I do offer a very in-depth and educational course. Talk to you all at the next video. Peace.